Hey everybody, just going live a minute or so early today. I'm gonna wait for some people to start joining in. Hope y'all are having a great Sunday. Before I start going over everything that's going on, I'll give everybody about 5 minutes. And if you join before anyone else, feel free to ask questions. I mean, I guess you wouldn't know. You're not even in here. I give everybody 5 minutes, and if nobody joins, I'm just gonna do a recap on Friday with QQQ, and yeah, just kind of give y'all a little something. This is where we stopped for the day. So there. Makes it a little bit easier. Hello, hello. What's going on? Do you have any questions? You're the only one in here, so before I start doing anything, I'd like to answer any questions that may be had. We'll kind of get a gauge of how Tuesday should kind of play out based off of what NQ1 is doing. So this is what it's doing right now. It's kind of just chilling, but it's in a rising wedge sort of, so I'm not sure we hold too long above the 200-day EMA, but we'll see. It was all right, man. My last week trading, it was okay. It was mainly just waiting for really good setups, and I didn't trade a whole bunch, right? Because I was just waiting for the setups, but I did have good trades. It just wasn't as many as normal. So, like, I don't think I even traded at all on Thursday or Friday. I only made one trade. Wednesday, I think I made like 2 trades or 1 trade. I basically only made like one max 2 trades a day last week, but the ones that I made were good, so it was good. But I didn't hit all of my my growth goals, which is fine. How about yourself? You have a good trading week? I know you had a couple mess ups, but overall, was it all right? Good, good. I'm glad that you did good with that. So I gave everybody. Oh, we still got 1 minute. Once the 6:05 hits, I'm gonna go over a little recap of, what we saw on Friday, and just kind of give more opportune entries so that you can see them a little bit better and get some practice in. And then towards the end, we'll go ahead and look at the futures and see what they're doing. And to the other viewer that just joined, if you have a question, feel free to ask, because it's just you and one other right now. So I don't think it's going to be a lot of people. I didn't really remind anyone about it this week, so It'll probably be a short, sweet session today. Got a few. Excuse me. All right, so I'm gonna get started. So, again, what we do is we go over here. I have trend lines favorited, and I have the anchored VWAP favorited. Anchored VWAP is what you're going to click. You're going to look for that first candle of the day. That's this one for me. And just a reminder what the settings are. Screenshot. 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 There you go. All right. 200-day EMA for me is my Williams alligator. You can see your settings. Screenshot. Screenshot. And screenshot. All right. So what we're looking at here is, this is a good example of a nice small space between your VWAP and your 200-day EMA and them still interacting very well with one another. So this is a good practice day to look at, okay? So let me see what the last candle of the day, this is the last candle of the day, this big one right here, okay? So there we go, okay. So this is the opening candle. What we see here is big wide move above and below. We're not entering anything yet. Another big move above and below. We're not in anything yet. Above and below, not in anything yet. This is the candle that you're going to enter a call on, with the understanding that the 200-day EMA is your exit point, okay? Because it is a bounce zone. Very next candle, you start here, probably, and I'm pretty sure I remember exactly what happened. It popped up, immediately rejected, and went down, okay? So if you entered and exited this play within, I think it was like 35 seconds or 45 seconds, okay? If you bought and then had your sell order in, you were good. And then here, this would have been your riskiest entry on puts. Reason is because this is a tweezer top. It's at the top of the trend. It signals a reversal, okay? Now, I did not enter here, but what I did do is I entered on this candle, and I entered about right here, actually. I didn't enter immediately on the candle. I entered about right here because it took a few seconds for me to realize that the new candle started and I was looking elsewhere. And it popped up, and I entered my puts, and I exited about right here for my like 10-15% win. And this was the only play I believe I took for the day. This was like the only play I took for the day. But this is where this is good. And then here is the opposite of this, right? This is a tweezer bottom. So this is your risky entry on a call for an exit out at VWAP. But your better entry is never, ever offered, because you don't have a candle that's fully above VWAP, right? This candle is still slightly below VWAP. It's touching VWAP. You don't enter. Now, this candle right here would have been a fake out, actually. So you might have entered puts here and gotten screwed, okay? With that being said, you would have seen this tweezer bottom form and exited. You want to put your exit. I know I don't talk about this a lot, but if you enter on this candle, your exit can be, a good exit is the top of that candle, right? The same candle is going to be the top. So you don't lose too much, right? You exit, you're good. You're waiting for another opportunity, which is here to enter puts. You're going to exit anywhere in this area. You would have made this back and you would have been good. So you would have still been green for the day, right? So you had a win, a loss, a win. And then here, you'll notice two things. So you'll notice a double bottom or a triple bottom even, right? And so this right here is your signal, a really early and risky signal to get in calls, because not only is it a double bottom, but this is again a tweezer bottom right here. And you could have entered your calls. I did not. I entered calls here, entered, exited, saw this happen, got ready to enter puts, but never entered because it rejected, and entered calls again here, right? And then you're done for the day, exiting at the 200-day EMA. So that's your 200-day EMA and VWAP strategy, right? Now let's look at adding inside candles to the mix, right? Let's see if there was any inside candles in this mix. Let me take a look, see. I think this is an inside candle right here. Yeah, it's an inside candle. So the break here, this was a double confirmation to get inputs. The rejection off of the VWAP plus a break there. Then you have, no, that's not quite an inside candle, but this is an inside candle. So this is your early entry into the calls here, right? Is the break above this. So you could have gotten in calls here, exited at VWAP, then gotten in calls again here, and been good. Let's take a look. See another inside candle, which would have been your signal to get in puts on this small break downward, and exit your calls. Actually, that's perfect. And yeah, that looks like it's it for the day in terms of that. And to answer your question, JLFAT, yeah, that's fine. I don't mind. If you need somebody, if you need to do that, it's fine. And so now, what else is there that we can look and add into this, right? Let's see. We could have also realized that this is a trend, right? So we could have done this. Seeing this would have been your best entry, and those calls would have been right here, and you would have rode that up for the rest of the day. And this is an easy to catch bear flag, right? Like that's a bull flag, I'm sorry, or bull wedge, whatever you want to call that. It's basically the same thing. But yeah, that's also an easy catch that would have been there. Juan, don't worry. I won't show it again, but if you wait for the upload on YouTube, you can just rewatch it and screenshot it there. No worries. I just want to make sure that this is all getting through. I don't want to go over the same stuff over and over in the same session, if that makes sense. But it is there, and I will upload it on YouTube, so don't worry. You'll get to see it, okay? Let's see. Is there anything in particular you guys want me to go over? One thing I wanted to show y'all actually is this. So I drew this channel actually in the start of like right here, like kind of in the start of January, somewhere like right here. And middle January, about right here. I drew it right here, and it's been respecting this very, very, very good, as you can see. like it's literally hitting the lines and popping. So there's one of two things that's going to happen, and this next week is going to be a very big determinator of what the overall move is going to do. So if we get a candle like this one, right, where we go crazy back up and we pop back up to kind of tap off of this trend line, we're looking for about 320 to 330. Okay, now on the flip side, we could finally be breaking this channel and moving towards our 200-day EMA. And if that's the case, we're going to have a candle that's going to be that big, but downward will break out and will hit about right here. And that would be a massive downward week. And I'm actually not opposed to that happening, in the sense that I don't think that it won't happen. Like, I think that it's very possible, considering all the news that's coming out right now. So something to consider is, if you see where this 200-day EMA is on QQQ, this is 220. So we'll probably hit about right, if we were going to hit it, we're going to hit it about right around here. So it's going to be 220, 225. And then if we go below, right, and this is the neat thing, right, is if you look at the overall moves on QQQ, right, the only time we go below the 200-day EMA is when we have our recession in 2008 and 09, right, when we have our recession, and then it plummets in 09 because of the recession. Everybody has to survive, and then we're finally picking back up. Well, if this is the case, so look at that, right? We go about an inch or so below. If that's the case, we're looking for around 190 to be our low. 190, 185 to be our low. If we dip below 200, I would not be surprised at that. Yeah, so this is where I think we're going, to be honest with you. This is what I see happening. I see us, at the bare minimum, what I see happening is us following this trend line, continuing to follow it, right? And then we eventually still hit here, right? We hit here and then finally break back up. That's kind of my thought process, is we're hitting new hardships as the same as this area. So what we should continue to do is we're basically right here. We're right here, okay? Or here, even. All right? If you want to look at it this way or that way, what we're looking at now is we're looking for a smack to the 200 and then a pop back up. So, sorry about my son in the background. So what we're looking for is this back up to around here, and then that. So right, so let's go back. Let's look at it again. We're looking at a smack and then a pop back up and then a real death, right? So we're going to touch the 200, pop up, and we're going to pop up about like 20%, right? We're going to have a nice pop, and everyone's going to think that that's the recovery. That, oh man, we're out of this bear market, cool, and they're going to start buying, and they're going to be sorely mistaken when this happens, when we drop 50% from that spot. So understand that this to this is probably what's going to happen. Something along this lines. I wouldn't be surprised. So that's what I think. Um, that's where I think we're going. That's because you don't have it on the 5-day weekly. I put 5-day and then I put weekly. But yeah, this is where I kind of think QQQ is going. I'm not gonna say that we can't pop up again to like go back up to 300 or even slightly above, but overall, overarching, I think if you got puts for like 200 in, oh, I don't know, I want to say like September, November, you're probably in a very good spot where you can just kind of average down on that play and just let it do its thing. So, does anyone have any questions? Kind of been ranting a little bit about this. Let's see what this is doing. Oh, geez. Alright, so we're kind of stuck between these two. This is a bull flag, so we could potentially break above finally, or we could just be rejecting and going below. We have to wait and see what this is looking like, though. To me, this looks like this. So we're gonna die. Soon. It might not be tomorrow or whatever. It might not be today / tomorrow or Tuesday, but within the week, yes sir. So that's what I'm seeing. Any questions, anybody? Any questions? Also, I've been noticing, just me, myself, that the 15-minute is a lot better for inside candles and just breaks off inside candles. So if you notice this one, right, this is an inside candle. To break above, just this to here is like $500 in futures. So yeah. The 15-minute inside candles are probably the best for day trading, and then the one day, so entire day candles are very, very good for trading as well. So if you look at this, we had an inside candle on Friday, right? So if we really want to do something, what we can do is we can say, hey, look, go set our range. We're just going to wait for this to get broken. And when it gets broken, which I think is going to be to the downside, it's going to be gnarly. It's going to be a pretty big move. So let's see, did QQQ have one too? Sure did. So with that being said, I'm setting this shit ASAP so I can be prepared. I want to be very prepared for that move because as soon as it happens, I'm going to be in that. Futures are open 24/7 except for from Friday close to Sunday 5 p.m. Central. And again, if you aren't super familiar with options or anything, you're just learning, I do not recommend doing futures yet. Futures are good to kind of like look to gauge obviously the future of kind of whatever market that you're looking at, but do not trade the futures until you get a very good foundation and understanding and you're very profitable and yada 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 with straight up options. But yeah, it's open. The futures are open. Does anyone have any questions? Only got 4 of you in here, so I want to go over y'all's questions. If y'all don't have any, then I'm probably just going to end this early because I don't really know what to talk about. Actually, I do want to talk about this. I'm going to just show this very briefly because it's something that I think you need to be aware of. So just listen to this and watch this real quick, if you guys don't mind.
This spirited man had been expecting this crisis.
I'm gonna fast forward a little bit.
Turning. A book about how
that kind of explains
and when history
the predicament that we're in and why we're in it. In terms of like just society and blah blah blah, it's the fact that we're just in a pattern. The society is in a pattern. We're in something called the fourth turning, and you should be prepared for it because more than likely we're gonna have like a world war or something very soon. So just watch for a second.
Repeats itself.
Maybe like 3 minutes worth.
And this is what the book said.
It explains it very well.
History repeats itself in 80-year blocks called saeculum, but we'll just call them history blocks. Not exactly 80 years. This is history, not math, but roughly the span of a human lifetime, maybe 80 to 90 years. Within these 80-year history blocks, we have 4 turnings of around 20 years each. We usually call them generations. This book calls them turnings. Turnings are sort of like seasons, like spring, summer, fall, winter.
I think it'll make a lot of sense to you as you watch this too.
Throughout our history, we've had these 80-year blocks,
right now.
And the 80-year blocks have been remarkably similar to each other. We're in one now. The first turning, the first season, is a high.
This is like
an
Great
upbeat
Gatsby
era.
Times, right?
The second turning is an awakening, a passionate era.
And so that's like
The third turning is an
70s.
unraveling, a downcast era. And the fourth turning, well, sorry, but fourth turnings suck. The fourth turning is a crisis, an era of upheaval.
starting in like 08.
We're in a fourth turning right now. So let's take a look at our saeculum, our history block. The history block that we're in the crisis of right now. Our high began after our World War II victory. By our, we mean America's. These are America's history blocks and turnings. During a high, the getting is good. We had the most even distribution of wealth during our high. You could work at a gas station and afford to buy a house.
This is how our grandparents were able to buy a house.
This high is
at
the
7-Eleven.
period that the MAGA hats refer to. We got Hank Williams and Elvis and Little Richard and the birth of rock and roll. We launched monkeys and men into space. This is when the Mustangs and Corvettes first came out. Our high ended with the assassination of John F. Kennedy on November 22nd, 1963. The high is not a high for everyone, of course. America still had a segregated South.
Correct.
Homosexuality was illegal and considered a mental disorder. The high is a period of conformity. The age of nonconformity and of social justice begins during the awakening, our passionate era. During the awakening, we had Martin Luther King and the Civil Rights Movement, acid, Vietnam protests and Vietnam itself, the Women's Liberation Movement, Stonewall and the Gay Rights Movement, great movies, great music. This is when the first Macintosh computer came out. The awakening is a time of increasing individualism. This second turning, this awakening, ended with the re-election of Ronald Reagan in 1984. Things get messy during the third turning. During the unraveling. We got the fall of Soviet communism and the beginning of the Russian gangster state. The greatest musicians of the time sang about violence and decay in their deteriorating cities. The LA riots, OJ, the bombing of Bosnia, and the Columbine high school shootings on the same day. September 11th, the wars in Afghanistan and Iraq. Our unraveling ended with the financial crisis of 2008.
Yep.
A fascinating fact about this book is that it was written during the last third turning, published in 1997. But the book predicts now, what's happening now in this fourth turning. And what's happening now is right on schedule.
Yep.
"80 years ago, in the last fourth turning, America had her Great Depression, then World War II. 80 years before that, the Civil War. 80 years before that, the Revolutionary War. Now it's our turn to save the country."
So, with that being said, it kind of starts to make sense why we are where we are, right? And what's going on with everything right now. So, now that it kind of starts to make sense, you can kind of understand that there's only so much that we can do about it. What we can do is position ourselves for that downfall to actually still come out on top. Because remember, when the society topples, right, when the wealth gets redistributed, because that's what's going to happen, it's going to get redistributed, one thing happens. Either the poor get poorer and the rich get richer, or some of those poor were able to set themselves up, take some of that money from the other poor and rich people, and then make themselves become rich. Or that money gets redistributed from the rich to the poor, and then it becomes a more even society. Well, we already know that's not going to happen. Only the first two scenarios are possible for us. So we have to, as people who understand what's going on, we have to position ourselves to be successful right now, right? And that's what I'm trying to help you guys do, is see what's going on and then be successful with it. So, yeah. Let's see. So we rejected that 200-day EMA, it looks like. Did this just change on me? I feel like this changed. Oh, that's why. No, that shit moved. What the hell? Whatever. That's super weird. I swear this was up here, was it not? Well, we could bounce off of that. Anyway, does anyone have any questions? I'd be willing to bet that this would be a good selling point. What the exit? About there. Whatever. We'll see what happens. Move it up some. Take a quick 100 or so. Whatever. What's up, Logan? How do I get you in where you can? I don't know how to do it. But does anyone have any questions? Oh shit. I guess it hit. Yeah, cool. So y'all saw that happen. It was super quick and easy. Does anyone have any questions, y'all? Been in here for about 35 minutes, kind of talking to myself. Want to make sure y'all got some questions. And what's up, Logan? What you been up to today? Chilling. Hello. Does anyone have any questions? Y'all out there? Nice, nice. That's what's up, bro. I appreciate you coming through. Oh, let me see. At what point to take a trade once it goes below? All right, so normally what you'd want to do, and obviously it's not going to work every single time. So I wait for my first full candle below or above VWAP. So your risky trade is on the immediate cross, right? I don't like that. With futures, I honestly don't like taking my trades except for on the 15-minute. So if you can see this, right, there was never really a full candle. We wouldn't even have entered anything yet. It's just all chop, right? But here, the only reason I entered this is because it was fully below, and I just wanted to like make $100 and just show y'all that it works. But there's like two examples here where on this time frame you would have gotten fucked. So like here, right, you would have been good because you would have done this and then got out here. But here you would have gotten screwed on your puts, or I mean your calls, if you entered here, because that's your first candle upwards, and then you would have just had your exit about right here, and then this would have been a good play for you the time of the candle. But you get what I'm saying? It doesn't work all the time on futures. So like, let me show you on what the fuck is this? That's fine. Okay, so this one's a little bit easier to. That's why I don't have it on. Okay, so this one's better. First candle below, you would have entered here, like one in this area is where it started. You would have exited the same candle. When your next candle is this one, you're entering here, or actually I think it started around, yeah, right here. Exit. This one could have been a loss. I'll give you that. This could have been a loss. This would have been a loss for sure. This would have been a big win. So you have win or loss depending on your own profit take strategy. So if you have a small profit take like I do, which is 5 or 10%, you still won. If you have it like 15, 20, 25, you would have lost on this one. This one would have been a loss no matter who you were. So this is definitely a loss, and then third one is a win. So it's not going to work every single time, but if you can get it to work 3 times out of 4, that's good. If you make it work, it works even half the time, as long as your profit take is more than your stop loss, you're good. And you have to be very disciplined with like your entry, right? So if I see this candle is fully below, and I'm going to enter immediately when the candle starts, right? And then I'm going to take my profit as soon as it hits. You know what I'm saying? On choppy days, it'll be like half the time accurate, half to 3 out of 4 times accurate. So 50 to 75% accurate. But on a really, let's see, let me look for another day where. So this one's a little bit better, right? So this candle is below, you enter, you're out for a win. This candle's fully above, you're out way above with the win, and then the day's over, right? So you get your puts here, and you're out at the end of the candle, and that's it. So do I leave runners? If I buy 10 contracts, what I do is I will sell 8 of them at my 5 or 10%. I will leave 2. One of them gets sold at the next 5% up, and then the last one gets sold at 25%. And if it turns against me, I sell it once it goes down 10%. So, for example, if I take my wins at 5%, and then the next one I take it at 10%, and then the last one goes back down to even, I'm out, and I'm still netting my win. And if it then goes up to 20%, but doesn't hit my 25, and then goes down 10% from there, and it stays at 10%, I'm out at 10%. So it's like a trailing stop loss of 10%. Yeah. So basically, you don't want to just use the VWAP in the 200-day, right? You want to be able to use your inside candles. So for this one, right, not only would you have had a call entry here, but this would have also been a call entry, right? So you have your inside candle. This is an inside candle. Immediate break, you're getting in your calls, you're out. And this could have been an average down moment. If you were really scared or whatever, you could have averaged down and then been out by the time you were even again, right? Like the even spot, you would have been out with profits. But I wouldn't have gotten scared. Inside candles on the 15-minute break is usually very solid. So yeah, that one. Let's see if there's another. This right here. So then we got another one right here. Right, this forms an inside candle. Breakdown, puts. So you have more plays within the day that you could have gotten. And just because 1 or 2 of the breaks through VWAP didn't work in your favor doesn't mean that you don't end the day a lot more green, right? It's about, this is the foundation, and then you can add little things like, you know, paint, right? You can add paint, you can add the driveway, you can do all this, that, the other. That adds a value to the home. This is just the foundation to the home. So this is kind of what you're looking at. So I'm not talking about futures. I'm just talking about in general when I'm talking about contracts like options. But even if I was to do futures, yeah, I would get 10, sell 8 at my 5 or 10%, and then have the next one sell at the next 5% up, and then the next one after that sell at 25% up or a 10% trailing stop loss. So this is a good rejection off of the VWAP. Probably gonna head back down a little bit here. Yeah. Does anyone have any questions? And to reiterate, let me tell you that the patterns, candle patterns, etc., that I recommend learning. So 1, if you don't know what a bear and bull flag is, you need to learn it. All right. Right. So this up is usually, if you're going down and then you pop up, this is what's known as a bear flag. Okay. You're going to pop back down. So in this scenario, you would have had it drawn here, right? You would have seen this, you'd have seen the breakup, you would have known, okay, we're going to go back down, and then you draw it here. and you're waiting for your brake back down below, you get in your puts, you're out way before this happens, but you're out like right here. And then here you start seeing the same thing happen, but instead of breaking down, you break up. That's okay because you drew your trend line. So as soon as you break up, you're in. So learning these flags, and then you start seeing this, right? So this now has become a bull, wedge, channel, whatever you want to call it, because now we're going down, but we're going up, down, and we're hitting newer. We're basically hitting a lower high, lower low, and we're basically just kind of condensing, waiting for a breakout, right? So once we finally break out, this is a big move. Well, now you see this. What should happen, realistically, is basically what happened here. Is we should kind of do this, and then break out and break above. But with this extra pressure, what could happen is instead of breaking out and above, we fall back down and we hit this level again. But learning these bear flags and bull flags is super important, and learning which is which, right? Because they do kind of look similar sometimes, and when they reverse, it's hard to kind of tell, right? So this being bear and then flipping into bull might have been hard to catch unless you really know what they look like. Also learning tweezer tops and tweezer bottoms is very important. So a tweezer top will usually come at the top of a formation. You'll see two wicks, and the body will be damn near the same height. The top will be the same, right? So here, top, same. Inverse, a tweezer bottom will have the same size bottoms. Let's see. What else is there that you should learn? Dragonfly and gravestone dojis are very important. Let's see if we can find one. They're usually at the top or bottom of a trend, and they signal a move. So like this would kind of be a dragonfly, right? Because we'll pop up. They're basically they look like little stars. Like they're real weak. They have a weak body and really long wicks. Futures, what's my stop loss? So if I enter on a candle, I'll basically make it the top of that candle, or I'll make it VWAP, right? Or it's really dependent on like how much am I trying to make on futures. So futures, I'm not looking at it in terms of like say I entered here, right? This is my entry. Well, my exit is going to be here, and then my exit is going to be here. And it's just because it's about the same length, so I'm going to put it like right there. But they're about the same length from each other. I'm using VWAP as my stop loss, and then I'm using my profit take as basically the same distance away. Now, if we were further away, I would use the candle top and bottom. So if I enter here, then this would be my stop loss, and then, my profit take would be, whatever my 2-to-1 ratio is. Which, if you need to know how to do your 2-to-1 ratio, I think it's this one. So if I was going to do this, and this is my stop, and I entered there, I'm looking for this to be, give or take right there. So 2-to-1 ratio, that's where I'd exit. As you can see, we're still going down too, from where I exited earlier. I exited right there. yeah. And if you need to know where to find that, that's right here. Short and long position. So long is going to be your, if say I entered calls instead. So say I entered calls here. This would be my take, and the bottom of this candle would be my stop, risk reward 2. Okay, that's how I would do it. All right. Does anyone have any other questions? Or just want me to go over anything extra, over any more, give some more, I guess, not necessarily feedback, but just some more examples on anything. Sometimes it just takes the repetition, right? Sorry about my son. He's hitting the terrible twos. Next week, my best guess, just based off of how we're moving already, is probably short. Just my take. We kind of already went up to here, right? We already did this. If anything, maybe Tuesday starts off a little strong and then gets rejected. Remember, I showed you this, right? So my best guess is that we've already had our up. So this was basically that. I think we have another big drop, and we go to hit about right here. Now this will be a deciding factor. Do we bounce off of here, or do we finally break through? And if we break through, then we're going straight to the 200-day AMA. Period. So. Oh yeah, I love AMD. Fuck is it? There it is. Yeah, AMD is going to more than likely continue down to this 200-day, bounce in somewhere in here. So 50 to 60-ish is probably where it's going to start bouncing. But yeah, I mean, and then it'll probably stay. So it'll probably bounce a couple times and then finally go below, and then kind of stay in the $30 to $40 range. AMD is gonna more than likely stay down for a good chunk. Though this is a falling wedge, right? And falling wedges tend to break back to the upside. So what could happen here is, say we do continue down, right? And then we pop up. We could see a big pop back to around 100. We could see that. We could see a big pop back around to 100. But if this happens and we actually pop back up here, we're going to probably see something more like 120. And I wouldn't put it past this market, because this market's stupid as fuck, to literally just pump out of nowhere when there's no catalyst whatsoever. Like, we're in the middle of a recession. Oil's about to hit all-time highs. It's been projected it's going to go to like 300 and like almost $400 a gallon, which is like $10. I'm sorry, not a gallon, barrel. And it's going to hit like almost $10 a gallon. Let's see. People are having the most credit crisis that there's ever been. Let's see. Housing market crash is very imminent. It just doesn't look good. all around. So for me to say that we go up doesn't make sense, but we've continued to have big market moves upwards for no reason whatsoever during this time already. So we could have another dead cat just based off of like the algorithm saying, hey, look, this is the falling wedge, we're gonna move, and then they force it to move. So that's something that could happen for sure. But I 100% believe, Mr. Terry, that we're going down to. I think that we drop some more because it just makes the most sense. And then let's also take a look at VIX. VIX has been in this basically, I don't know what this is, but it looks like a type of wedge, not wedge, kind of actually a bear channel, right? Because we're moving up, but it's consolidation up. So I don't know. We could see a VIX. VIX is in a tough spot right now. It has the 200-day EMA underneath it, looking to propel it back up, but it also has the pattern which saying it wants to break down. So that's true. It also looks like it could be trying to form a cup and handle if possible, but just because of this, we would have to go crazy high up, right? So we would have to, I mean, unless you count this, so we could go, and then this is dropping, so maybe we drop a little bit more to like there, and then if we go back to like right here, if we hit 45, we've definitely formed the handle, and we're gonna go back up to around 70 something. Which now that I mention it, you see VIX had a ridiculous call for I forget when it was, but it was like $75. It was 70 something dollars. $60 for July 20th. Let's see. I know there's a big one. I'm trying to find it. An $80 strike price not that long ago. I can't remember exactly what the date was, but it was an $80 strike price, I think, for August. So, I mean, this could happen again. And if this happens, right? Let's look what happened in February/March of 2020 to SPY. We dropped from 335. We dropped $100, over $100, a third of the price. QQQ also dropped almost like 35% there. So with that being said, what we could see here, and this would not be outlandish, is we see a nice little rise, and then the break, and then basically huge drop to around 350, 345. I use quant data. It definitely does look like it's trying to cup and handle now that y'all say that. It definitely does. I can see it. But I can also see this, which looks like this, right? And then turned into that, so. But I could see it. I could see us going like this, but then we'll have a big drop and then a big rise. So if we have that big rise, that looks like it's January/December of this year or start of next year. Yes, the Discord, just for anybody in here who's not in it, we charge $15 a month to basically give you all of your, we call trades out during the day. You know, whatever we're entering, we're calling it out, our entry and our exit. We're giving reasons why we're entering, so it's not just like a call out service, right? Like we're actually helping you understand why. We're doing live trading during the day, mostly. That'd be Logan who is doing that, but he will take answers during the live stream and answer them and chart and do all that good stuff for you if you ask. And let me see. Yeah, but again, don't feel like you need to join, but if you want more like personalized help, if you want just more like, hey, I need help now, I can't just watch your TikToks or whatever and blah blah blah, and I'm learning, but I'm not learning as fast as I could be, the Discord is definitely a good place to be at. I'm not going to push it on you, but it's worth the money. Most people who are in it enjoy it. And JL, I would agree with you that lately the cup and handle is not very effective, but remember, volatility, the bullish and volatility is bearish in the market. So it being, it looking bullish in volatility is actually making sense, right? So whenever we see a cup and handle in something else, it hasn't been very effective because it's part of the general market, right? But this is kind of like the opposite of the market, so to say. So like, let's see, if we happen to see any cup and handles here, right? Like this would probably work out in our favor. This is actually a backwards cup and handle. But yeah, SQQQ is not going to work out because it's triple leverage. Theta works against it in the first place. Yeah, we're not going to see any except for this. And if you do want to join the Discord, I will paste the link in here if it lets me. If you want to, don't feel obligated, but since you were asking, I'm just going to make it easy for you. And yeah, if anyone has any questions, I am happy to answer them. If not, I'm going to actually go get some groceries in a moment and pay like $500 for groceries that cost me $200 2 months ago. So, super excited about that. When we go live, Logan will usually go live like right at market open or maybe 15 minutes before market open, and he will let you know if he's getting off beforehand. But usually he'll like end it right at market close, and he'll let you know like, hey, I'm getting off, blah 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 blah. So, or if something's going on, he'll tell you like straight up like, hey, I got something going on, I won't be on until X time, etc. And if I can get on, I'll get on. Normally I got a lot going on though, so I can really only type and like send messages and stuff during the live trading time. But yeah. Ooh, JL, that might not have been a good idea, sir. Not to swing, but you know, you might get a early pump. So I'm not going to tell you that it wasn't a good idea. And you're very welcome, AWOL. Does anyone have any questions? Let's take a look at this. So as you can see, we went to hit the 200. Now, this is going to be a huge determinator on how we're probably going to move on Tuesday. So, do we start rejecting and moving back up, or do we just fall through? If we fall through and this starts going negative $200, $300, $400, Tuesday's going to be red as shit. Period. Point blank. Period. Just going to be red as fuck. So, I appreciate that y'all enjoyed the live stream, and if y'all don't have any questions, before my son blows his top, I'm going to head off and go get some groceries. But I'm going to wait a second, see if any of y'all have anything typing, any questions. If not, I'm going to head out in a couple minutes. Doesn't look like anyone has any questions, so I am going to log out. I hope that y'all have a wonderful 4th of July. I personally am not really like celebrating it like in terms of, like America's great because our leaders suck ass right now, but I will be eating some nice hamburgers. So yeah, y'all have a wonderful 4th and enjoy your day off. If there's no questions, I'm gonna go ahead and hop out now. So thank you all for joining and all the questions and stuff that were asked. I appreciate it, and I'm happy that I was able to help. So I will see y'all tomorrow, and if you're not in the group, I won't see you tomorrow, but I will see you next Sunday. So I will be ready and try and put a little bit more cohesive kind of curriculum, if you will, together for you for next Sunday so that I can go over a little bit more. And be prepared, because I'm actually thinking about talking about the fibs next week. So be ready for that, because those are a very good tool along with the VWAP strategy. All right. Y'all have a wonderful rest of your Sunday and a good Monday. Bye-bye, guys.